So, talk to me about the pandemic and the election impact on the municipal bond credit markets, if at all it has adjusted your thinking about kind of where we are and where we go from here.
Okay. So I would say, as the chief credit officer, I'm very focused on municipal credit quality. And, there have been a limited number of downgrades. In fact, there was a report that came out today on Bloomberg News that Moody's was reporting downgrades of about $43 billion in municipal bond debt. And that was for 73 separate issuers in the third quarter. They also had upgrades during that same time period of $13.4 billion. But I think the thing that's important to note is that the vast majority of those downgrades were for only two issuers. Just over $26 billion worth for the New York City MTA, and then another $7.7 billion was for Hawaii. So those two, the downgrades for those two credits represented over 79% of those total downgrades. And I think one of the things that's very unique about the municipal market is there is just the level of diversity. There are literally thousands of credits in the municipal market.
Right.
So investors really have to look down at a very granular level. We always joke around, if you've looked at one municipal bond, you've looked at just one municipal bond. And so, but we have
It's nice to know the muni bond market and credit market has little jokes in it. It kind of makes it just that much more endearing. Can I just say that?
I suppose.
Well,
I will say, certain sectors obviously have faced some stress, like mass transit and airports and communities that are reliant on convention centers and tourism.
right.
So we've seen that happen. But interestingly, we've also seen sort of surprising stability in sales tax collections in smaller cities and communities. And I think that is reflective of the impact of taxing internet purchases and of people staying local. So while larger cities may have seen a loss in that kind of activity,
That's interesting.
actually the vast number of local communities have done fairly well.
We'll talk about getting on the granular level. I mean, that really tells you something, right? And if you think about it logically, that makes sense, right? Because big cities, you've just seen people kind of run away, and that has just hurt all the businesses and certainly impacted the tax base. But those smaller cities and communities, you've ended up doing kind of a lot more shopping or restaurants or what have you, kind of in your backyard.
Right, and the adoption of sales tax on internet sales has really been beneficial to a lot of these communities.
Well, let me just layer on top of that. How do you factor in kind of college towns and university towns and what impact that is having?
Yeah, so that is definitely something that we do see. The impact on spending and buying, and it really has varied widely by location. Different universities and college towns have made different decisions about how to reopen, and some of those decisions have changed over the course of the semester, where people started out with a lot of remote learning and transitioned to in-person or converse, depending on the locality. But we definitely have seen that impact both on sales tax as well as on some of the transportation. Students ride a lot of buses, and so in communities that relied on student sales and student bus riding, there definitely has been an impact. We think, we see it coming back. Spring enrollment is up from fall enrollment in most locations, in most universities. But again, it waits to be seen.
Yeah, I do feel like, well, what kind of, that's a good point. And I do wonder, Suzanne, what kind of visibility you feel like you have when you look at this market. Is it 3 months? Is it 6 months? Are you thinking more about a year from now, especially kind of coming on the heels of the vaccine news yesterday? I think we're all starting to feel like, we still have a long ways to go, basically.
Right. Well, BAM is in a little bit of a unique position as a municipal bond insurer because we insure the bonds to maturity. So unlike a bondholder, we can't sell out of our position.
Right.
And so we do take a longer view. I think we've been focused in this environment very much on liquidity and management. And I think that some of the federal programs and state programs that we've seen happen so far and that we're hopeful for additional funding in the future have helped with those liquidity concerns.
So, Suzanne, talk to us a little bit about stimulus. How important is that? We've certainly heard from a lot of folks. We've heard from a lot of states and cities that say we need some relief. But how important is it from a municipal bond investor's perspective?
Well, I think, Carol, that the importance of a stimulus package really can't be overstated. Right now, the size and timing of the package is pretty uncertain, although Senator McConnell has indicated some willingness to get a package approved during the lame duck session. In the initial packages that had been approved, there really wasn't direct funding allocated to smaller cities and local governments. It mostly was directed at large cities and certain kinds of other entities like airports and universities. So the smaller local governments really are hurting and do need some additional assistance. I would say that even if they didn't get direct funding, those local governments would still benefit from any economic revitalization that came as a result of more general provisions like extended unemployment benefits.
So one thing I've got to ask you, because we were saying the day after the election, Suzanne, is that while we were still not sure who was the winner in terms of the presidential race, one winner that seemed clear kind of off the bat was marijuana stocks. We were watching because of all of the marijuana and cannabis initiatives that were on ballots and that were voted on in favor of expanding the industry among some states. So what's the impact on that, or what impact can it potentially have on some of the states and local municipal revenues?
Well, so I guess ballots, there were legalization ballots in varying degrees in New Jersey, Arizona, Montana, and South Dakota, which all passed. And, in the past, we have seen modest revenue increases in states that have previously legalized marijuana, such as California and Colorado. But it comes with a variety of hurdles and issues that range from concerns in the local community about potential growing facilities and sales in particular areas. There's also the whole issue that as long as marijuana remains illegal at the federal level, any federally chartered bank is not able to accept deposits from those businesses,
right.
And that creates an issue.
It's still a kind of big hurdle, note to self, right?
Right. Exactly. And there was some discussion. I'm sorry, go ahead.
No. Please, you go.
There was some discussion and some bills that had been introduced earlier this year, but I don't believe that those were approved.
Well, and what's interesting, though, the trend, Suzanne, I mean, do you think the trend around the country, we heard from New York Governor Mario Cuomo after what happened in New Jersey, right? All these states are watching what's kind of happening to their surrounding states, and I guess no state wants to miss out on revenues. But do you feel like the trend is in that favor, and that ultimately at some point we will get some kind of financial regulatory framework on this?
It is hard to predict, but I did note with interest that one of the proponents, or not a proponent necessarily for legalization, but the head of the FDIC pointed out what a major issue this was and how it is disruptive economically to have this gap where the federally chartered banks can't accept these deposits. And there isn't any other industry that's treated that way.
Do you anticipate any obvious stresses? I know there's certainly some troubled, specific issues. As you said, you really have to kind of drill down. You can't just kind of paint the muni credit market with just kind of one brush stroke. But what is the one? Is there a macro issue there, though, that gets you a little bit worried when you look at this market?
Well, I think it really depends on how long the pandemic lasts. Whether this is just sort of a temporary situation and things sort of come back to where they had been historically. I think if you look back to what happened in the Great Recession in 2009 and 2010, State governments collect a vast amount of their revenues from sales tax and income tax, which are immediately impacted by any kind of a recession or downturn in the economic activity. In those years, the states reduced revenue sharing to local governments and school districts in order to balance their own budgets. Most localities get the vast amount of their revenues from property taxes, and changes in property values lag.
Yeah.
And so the impact of that doesn't happen at the local government level for a while. And so, I think if this carries on for a lot longer, then we will see states take those same kind of actions that they took in 09 and 10. And that's going to be very impactful.
Yeah, those are good, really important points. Suzanne, thank you. Suzanne Finnegan, she's Chief Credit Officer at BAM, Build America Mutual, joining us on the phone.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM insured municipal bonds deliver default protection, value preservation, and a durable AA rating from S&P. BAM's insurance protects against everything that causes a default, and adding BAM insured municipal bonds to your portfolio is easy. Talk to your investment advisor. Visit buildamerica.com or look for BAM eligible bonds on the Perform Portfolio Management System. BAM. Build America Mutual.